Hello everyone, welcome back to the trading room. My name is Ed Ponzi. I hope everyone out there is doing well. We're into the middle of August now. It's August 11th, and I don't know, man, life is good. I hope you're enjoying your life wherever you are. I've seen some amazing things over the last few days. Has nothing to do with the trading or the market, but just great stuff. And I wish great stuff for you as well. Let's get to your questions because we have a lot of them, and man, are they good. So the first question deals with the stock that I have up on the screen in front of you. It's eBay. The question is, what's your opinion on eBay? It has broken through resistance at 52.35, and that's this area right about here. Okay. Potentially a long way to go. I would have to agree. There's a lot of upside potential here for eBay. I've used the blaster strategy to buy at 54.44 to stop at 52.88, following the trend up to its high of 58.70. So he's looking up here. I'm actually showing the high being a little bit higher, but that's okay. Look, this has been, if you go back to the beginning of last year, this has been in a range, and there's a lot of support down here. The buyers keep coming in down the low end here, and you can see that I've drawn in an inverse head and shoulders here, so it appears to have formed that. And the sellers seem to come in somewhere between, 57 and 59. So is there upside here? Yeah, I'd say so. I mean, this looks pretty bullish to me overall. It's certainly more bullish than the overall market. One of the things that we like to do is to keep an eye on volume. But you have to also realize that, look, it's August, okay? And think about what that means. Is this breakout happening on high volume? No, it isn't. But just keep in mind, we're in August, so don't be too surprised by that. I mean, it's a very quiet time for the market, and eBay might be sneaking up on something here. So, yeah, I do like it. I do like your trade, and I think your analysis is probably on target here. You've got that head and shoulders is pretty good. And you've also filled this gap. Those gaps act as resistance. You're past that. You're above the neckline. You're above the 50. You're above the 200. There's a lot of good things to like about this chart. No, by the way, on Friday, you see this close on Friday? This little green guy here? Friday's close was 54.09. That's the highest close. You'd have to go all the way back to here before the gap down, right? So you got to go back to April 29th. So, right, May, June, July, August. It's a 3-month. That's a 3-month high. And when a stock's hitting a 3-month high, one of the things you can say about it is that anyone who shorted it over the past 3 months is losing money. Right? And when you look at the chart, if you're short, if I were short and I looked at this chart, I'd be scared. I'd really be worried because it's broken above this trend line, which is also the neckline, and it's broken above, it's broken above the gap, it's broken above its key moving averages. I think there's a lot to like here, so I do like the eBay. I just wish it was popping on high volume here. Maybe we'll get that later, but that's like the only thing that's missing, and I'll give a little bit of allowance for that because of the fact that it's the dog days of August here in the U.S. and gosh, what are we expecting, right? We can't expect too much. Okay. All right, great one there. Let's continue. Okay. Currency question. Let's say the U.S. has performed airstrikes. Russia, the U.S., and Europe are going tit for tat with sanctions, with huge possible consequences for trade, and Euro-USD strengthens. Well, it did get stronger, but it didn't really last. And by the way, we're very happy with our Euro-USD trade. We did close out, if you check the last session, we've already closed out pound-yen. Just didn't like the way that was working against us. Euro-USD continues to be with the stop at break-even. We've hit the first target. The second target lies below. And we're just kind of floating around here with no direction. So why does the euro go up in there? Well, so the euro had a couple of good days in here, but overall, I haven't changed my mind about being short the euro. I just want to be clear about that. I think that the sanctions are potentially negative, but yeah, some of the activity in the market's been kind of weird. And you look at that and you say, well, maybe this whole deal with the sanctions has already been priced in. We're just not seeing a lot of movement here. You would think the euro would be going lower on this, but the fact that it's not, might be telling us that, well, maybe those sanctions are kind of priced in. And listen, there's plenty of time to get this all sorted out. It's a good thing it's not winter time right now, because Russia could snap their fingers and cut off supply of natural gas and oil to Europe. But it's just a good thing that it's August is all I can say about that. That might be buying some time here. It's like, okay, maybe traders are saying, maybe investors are saying that by the time this becomes a problem, that maybe by the time Russia becomes an issue for wintertime heating in Europe, maybe by then there's plenty of time between now and then for things to get sorted out. I certainly hope so, and maybe the market's being a little bit hopeful there too. So if that is not confusing enough in itself, Japan adds 24,000 more contracts for shorts, and this is great. I love the fact that this reader is checking, right? Look at this, the most recent Commitment of Traders report. They added 24,398 contracts in 1 week, and look at this now. Now it's more than 10 to 1. They're lined up short to long. I mean, that's just brutal. And the numbers are growing, so that there's more and more open interest. And the gentleman goes on to state, whatever happened to risk on and risk off? The Swiss franc and the dollar look like they're completely have lost their safe haven status. Well, the dollar has been strong overall lately. Let's give the dollar a little bit of credit. But I agree. I actually agree with this. I mean, okay, yeah, the dollar did run up pretty much, right? And it's into this area of resistance right now. But yeah, I get you, man. I mean, and this is why we get up every morning and do this, because, every time you think you have it figured out, the market, there's twists and turns that don't seem to make sense, and it's kind of our job to try to figure it out. Sometimes it's just not that easy, but, I get it, man. But yeah, the yen is the one seemingly that we are focused on in terms of risk off. But the dollar has also gained a lot of contracts. I think if you jump back here, yeah, here you go. USD long position soar. So they're buying dollars and they're buying yen. And it remains to be seen how that's going to play out. But stuff, right? And that is a huge, huge change on the COT report in terms of the yen. And by the way, pretty big change in terms of euro too. The euro shorts. I hate to see this because the euros. There's more and more people shorting the euro. Well, I'm already short the euro, but it's like the world is now starting to agree with me. And frankly, I don't like it if everybody agrees with me. It means everyone's already figured it out. And it bums me out a little bit because once everyone figures it out, there's no more upside for my trade, or I should say downside, because we do want the euro to go down. Okay, so yeah, they are acting like they've lost their safe haven status to some degree. It's like the yen is really the one, right? Only the yen reacts to world turmoil. What would I do without you, Dr. Ponzi? Well, I'm certainly not a doctor, but I play one on TV. That's not true. Okay, anyway, you see what we're talking about here. The yen, it does seem to be like they're getting out over their skis just a little bit here. It's on the boat. You've got 10 people to one side of the boat for every one person on the other side of the boat. And that means eventually that it's going to flip and go the other way. All those shorts are going to have to cover sooner or later. But usually that happens not when the open interest is growing, like it is down here, but when that open interest begins shrinking, that's when the script usually flips. So maybe not yet. So, but I'm no longer short the yen with the pound. I just, it was talking to you guys, talking to my students that convinced me, look, my students are now confused as to why I'm holding this as it goes against me. Therefore, you know, and if I think, even though my stop is all the way down here on this red line, my students were right. So, you know, I mean, there's really no, it's not doing what I thought it was going to do. I bought it on the breakout here. Is there any way to justify buying the breakout here when it's doing this? The answer is no. And I can always buy it back later if I want to, right? I can always get it again later. So that trade, you know, we closed that one out a while ago at about 172. And yeah, you know, it's right now 170, 160. I don't really care what happens to this one now, but I am thinking of buying yen as opposed to selling it, but you know, this is probably not the one to do it against. And I'll certainly let you know if I do. I was actually thinking of doing a yen basket trade, like buying the yen across the board. But the fact that, and again, this email was titled Confused. Yeah, this market can be confusing at times and does not always seem to make sense. And that's something, you know, with all of our analysis and everything that we put into it, we know that we don't know. You know, we get an edge. The knowledge gives us an edge, but an edge doesn't guarantee that, you know, it's not always going to help you each and every time. Sometimes you just have to deal with uncertainty as a trader and deal with the fact that the market does not always behave in a logical fashion. Somebody once said the market can remain irrational longer than you can remain solvent. So keep that in mind. It's a famous old saying. Question about CDS. I'm having a hard time making sense of the site you advise to look for on CDS. Okay, I have a different one for you if you want to check. I just want to look at a CDS graph or change in the cost. A little help, please? No problem. Let me see if I can help you out there. I'm actually looking at, this is CNBC, Sovereign Credit Default Swaps. Now, all you got to do to get to this page, just go to Google, type in CNBC, CDS, and you'll get it. And what are we looking at? I'll tell you what. You're looking at the cost of insuring bonds for all these different countries. And I'll give you a really great comparison on here is Germany versus Greece. Okay, Greece, if I want 5 years worth of insurance for my Greek bonds, it's going to cost me $505 per thousand, which is per 10,000. If I want to insure German bonds for the same length of time, it costs $22. See the difference? The insurance for the Greek bonds is very high. Why? Because it's a high-risk bond. There's a very good chance that Greece never pays back its debts. Could happen. Is that too far-fetched, that Greece might never pay back their debts? I don't think it's too far-fetched. So it's very expensive to insure your Greek bonds. It's very cheap to insure your German bonds. Why? Because it is very, very likely that the Germans are going to repay you if you buy German bonds. And that right there in a nutshell is the difference. This is low risk, and therefore it doesn't cost much to insure it. Because let's face it, if I own German bonds, would I buy insurance for them? Probably not. No. But if I owned Greek bonds, yeah, I'd be looking for insurance. And it looks like a lot of people are looking for insurance. Because why? Because look at the price of insuring them. Very high. So just to look at that, and they're also telling you the change in price and the percentage change in price. So the change in price dipped a little bit for German bonds, and they went up a little bit for Greek bonds the other day. And we'll look at some other fine countries here. Here's U.S. CDS, 5-year. Costs very little to insure U.S. bonds, right? Costs very little to insure UK bonds, right? Sweden, very, very cheap. Right? But Portugal, we know Portugal's had problems. Costs a pretty penny. Not as much as Greece, but 210. Italy, We know Italy's had some problems here and there. Doesn't cost as much as Greece or Portugal, but it sure costs a heck of a lot more to insure Italian bonds than it does to insure U.S. or German or UK bonds, right? There's Spain, $77. Okay, I wonder if they let you chart them on here. That would be interesting. Let's see if we can we get a chart? Yeah, we can get a chart. Chart not available. Darn it. Because I'm willing to bet you those bonds used to cost a lot more. I mean, that insurance used to cost a lot more. Okay, so anyway, they don't chart it. But anyway, you get the idea? Okay, let's go type in CDS, CNBC CDS, or CNBC Sovereign Credit Default Swaps, which is what CDS stands for, Credit Default Swap, right? And there you have it, right? Does anyone cost more than Greece? Doesn't really look like it. But you notice Argentina is not on here. Yeah, good luck. If you own Argentina bonds, good luck getting paid on those, right? Okay. All right, let's get to the next question. Great stuff, huh? And great questions. Thank you again. Let's keep it rolling here. The euro. Back to the euro, which we are short. Euro against dollar and happily short. You made a comment in your last mentoring video. You said if the yen keeps on getting stronger, Euro USD will go up. Why? Okay, I've been looking at this question, and I honestly don't remember saying that. And if it's possible that I did say it, it's entirely possible that I did say it. I may have misspoken, but I don't really know what was the context of the discussion at that point. But without any context, I honestly can't remember why I thought Euro USD would go up if the yen would get stronger. I mean, conventional wisdom would tell you that if things get worse, the dollar should get stronger, not the euro. So I'm not sure exactly what framework I was discussing that. I don't know what the context of my statement was there, so I apologize if I confused you. But I just don't recall that one. And I guess I'm taking the fifth. Right? But if you do, but in all seriousness, if you do, if you have the time and the energy to dig it up, and if you can get more of what I was saying before and after that, in other words, I could get more context on it, I might be able to help you out, but it's entirely possible that I simply misspoke, and if I did, I apologize. That does happen sometimes. I'm a real motor mouth sometimes, and I know what I'm thinking, and I'm trying to communicate it as best I can. Occasionally, I do get my words crossed up, though, and I do apologize if that's what happened. Let's get to the next one. This one is about stocks. I'm using the Blaster in 2020 strategies to identify potential trades. With the Blaster, we're looking for a solid uptrend. That's true. And with 2020, we're looking for tradable patterns. Could be bullish, could be bearish. That's important, right? The strategies use different screeners. Are there reasons for this? Okay, in a nutshell, I'm just giving you options. Because there are going to be times, I mean, there's no perfect strategy, right? There's no strategy that's always going to have the answers for you. And therefore, like even in Forex, right? In Forex, we use two different trending strategies. Why? Because there's no one trending strategy that's going to capture all the trends. And the same thing is true in stocks. There's no one stock trading strategy that's going to capture everything. And the thing about the 2020, and we have the reverse 2022, which searches for bearish patterns, what if this market turns bearish? I mean, right now, the stock market, it's kind of like iffy. I mean, this looks kind of scary to me here. It pulled back, and we were talking a lot last time around, by the way, about that 100-day moving average. So let's see what happened to it in relation to everything else. What happened to that 100-day? That's the 200. I'm going to swap that out for the 100. And you can see it looks like we bounced off the 100 again. I mean, holy cow, man. Right? Bounce, 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 bounce. I guess we need another arrow. I guess we need another arrow. Okay, at least for now. The S&P 500 survives that 100-day again. Okay, back to the question here. I've entered the 2020 search criteria into FinViz as opposed to Google Finance. Take advantage of the graphs that are displayed with the symbols. Yeah, that is, FinViz is pretty awesome, and you could do 2020 on FinViz. So you could do, I mean, FinViz has a terrific screener. And Google Screener has been had issues lately. I don't know if there's a problem with it or not, but I totally support using FinViz if you're having an issue with the Google Screeners I have. Now, continuing with this email, I found Boeing with resistance at 130 and 70 cents. Let's pull up Boeing. And he found Boeing right here at 130 and 70 cents. That's going to be right here. He's going to sell short, right? I took the second chance and went short at 130. And I think we see what? We see like a head and shoulders here, and it broke, and it came up and give him a second chance, and he shorted it. God bless him. He took the second chance, went short in July, and closed it at 119.35. So closed it all. Man, you did great. What a great shorting it here and covering the short very close to the bottom here is a nice trade. I'm very pleased with my result, as this is my first solo trade. Great job, sir. Great job. I have advanced under your care to going solo, not only in stocks, but in Forex also. Well, thank you. And let me just add that, you know, trading is trading. Stocks and Forex are not exactly alike, right? There are definitely differences. We don't trade them exactly. We really don't trade them exactly the same way at all. But there are certain things, right, that are applicable to both stock and Forex trading, and that's something I can tell you from personal experience. It's just there are certain things that are applicable. That's the word I'm looking for. So anyway, great trade. So you see, Ed, from a total novice and interested skeptic a year ago, I have advanced to go solo not only in stocks but in Forex also. Needless to say, I am serious cautious and do take hits regularly, but they are controlled. That, my friend, sounds like a guy who is on his way. Congratulations. Yeah, you're going to take hits occasionally, and we all have that, but you know what? It sounds to me like you're on the right track. Especially, look, if that was your first year trading and your first year using this stuff, guess what you have now? So a year ago, you were a newbie, a novice, as they say, a newbie, and a skeptic. Guess what you have now that money can't buy? 1 year of experience, my friend. Money can't buy that, okay? So if you're in there and you're getting the hang of it and you're not getting killed and you've got a year of experience now, I'd say you're doing pretty good, okay? And certainly something I like to hear, so thank you for that. Okay, covering shorts. In your experience, is there always a covering of positions as traders realign themselves to take the other side of the trade? Yeah, eventually it's going to happen. Just to get back to the CFTC, none of these shorts are going to be short forever on yen. So that means at some point there's going to be massive buying of the yen, which means I want to buy the yen now before they do, right? All these people are going to have to buy the yen sooner or later, right? Because why? Because they're short. They're short means they are future buyers, is how I look at it. So in a sense, I'm front-running them. I'll buy some yen probably very soon. I'm kind of looking for a little bit of yen weakness so that I can get short. I'm just kind of biding my time, waiting for a good entry. But I will front-run these guys. They're all going to have to buy sooner or later. I'll buy ahead of them, you know, and try to see if I can get on the other, you know, then when they switch to the other side of the trade, I'll already be on the other side of the trade. See what I mean? And this is one of the reasons why I did not like my yen short, because everybody was on the same side of the boat with me, and that doesn't make me comfortable because I can feel that boat starting to tip just a little bit. Okay? The intensity of this rally determined how big is the difference in the COT? Not entirely, because remember, you're not looking at the Forex market here, you're looking at the futures market. But this can give you a pretty good idea. So yeah, the more out of balance it is, I would not say it's necessarily going to be more intense, but I would say the odds are tilting that way because there's such a big imbalance growing here. And, if they all start running for the exit, there could be a little bit of a panic. So I'm not saying that's what's going to happen, but I would say the way this is set up right now, with massively short, more than 10 to 1 short to long, pretty good chance that, yeah, it's going to be kind of intense. And we'll probably be long the yen when it happens. Speaking of the yen, good evening. Last week I went short euro yen at 137.50. Let's pull up the euro yen. Great questions this week, everyone. You can see we're in a downtrend here, right? So somebody went short at around 137.50. That means we're right in that neck of the woods. That's a sizable gain, even after the rebound that we've seen here. I went short 137.50. I've already moved my stop to break even. I was wondering if it's a good idea to try to add another lot to this position around 136.15. And what is a good target? I was looking at 133. Well, first of all, whether or not you're going to add to this position, I would not. If you're already in the trade, I can't tell you what to do. I'll tell you how I operate. Okay, if I'm already in the trade, I'm not going to add to the position unless that's part of the strategy. So, for example, when I'm doing an FXED trade, adding to the position is part of the strategy. It's optional. I don't have to do it, and I wouldn't do it in every situation. But I have the option of adding to the position. But that's something, for me, that's something I have to know ahead of time. I have to know ahead of time if I'm eligible to do it, and if so, at what price point. If you're already in the position and you're trying to make that decision to buy or sell more, I would just caution you that your thought process is probably going to be somewhat affected by the fact that you're already in the trade. When we're already in the trade, sometimes that prevents us from thinking clearly. Certainly doesn't happen to everyone that way, but enough of us, being in the trade and then making decisions after you're already entered the trade can cause problems. I try not to do that personally. Okay, I try not to make decisions if I'm already in. Occasionally I do, obviously, but I try to let things roll the way I planned them. And if I were going to add to a position, it would be part of the original plan. Okay, if it gets to point X and my stop's already past break even, I can add. But I don't have to. Okay, that's how I look at it. Great question. What's a good target? I was looking at 133. Let's pull it up a little bit. I mean, this little guy right here is probably going to cause a problem. It is actually right now, so we've bounced off of it a little bit. Right, that's about 136.17 or so. We got a little wick under there, but that's all. That's not a lot of support, by the way. It's just a little bit, and it wouldn't surprise me at all if that broke. Now, going further down, man, there's an awful lot of ways you could draw this. Now, look at this. First of all, is there any downside on this chart? Holy heck, yes, there's a lot of downside on this chart, okay? There's plenty of downside on this chart. I might be tempted to short it, but I'm already short euros against the dollar, and I don't want to load the boat. If I'm looking for a target, one of the things I might do is pull up Fibonacci and say, you know what, this 133.22 area, there is some Fibonacci support in that area, so I might use that as a potential level, because we're drawing from a major low to a major high, and there is some activity a little bit above 133. It looks like 133.25, just to round it off a little bit. And there's a little bit of, there's a little bit here too, around 135.40. That doesn't look like a huge problem, but it could be a minor problem. But yeah, I think the 130, a little above 133 area looks like a reasonable longer-term target for this. But holy cow, right? Look at the downside potential. Is really quite amazing if you think about it. Okay. All right. All right. Let's continue on. Great question. I'm just blown away, and I think what it means is that you guys and gals, right? You guys and gals are really paying attention. One of the things I've noticed is that the quality of the questions has gotten better and better as you're developing. You're asking better questions. this just brings joy to my heart, I have to tell you. It really makes me happy because it means that something's working here. And some of you are telling me that you're placing great trades. I think that's wonderful. But even if you're not winning, if you're learning and you're not losing super badly, then you're probably doing okay, because once you have the experience and you've learned everything and internalized it, you'll be a better trader than you were in the past. Okay, so anyway, great stuff, and I appreciate it. All right, so I caught you up on Euro USD. That's my Euro short position. I am long Euro Swiss. Nothing much has changed, gang. I mean, this one's down a little bit. I'm down 13 pips. Whoop-de-doo. I'm not worried at all. Nothing much has changed in currency land except, like I said, I'm thinking about, if the whole world wants to short the euro, I'm thinking about buying it. And you know what? Shorting the euro, where's it getting them? Where's it getting them? This thing hasn't gone anywhere. It's not gone anywhere yet. So if they're short the euro, this has not done a thing for them. You got to wonder at what point will they become impatient. Okay. New Zealand. New Zealand is just, don't you love the way it's just popped out of this sort of this demand zone on 2 occasions? Pretty cool. But yeah, New Zealand dollar just looks terrible overall. But I'm wondering if it's going to find support down here. The price of milk has really collapsed. You know why? Because they're producing a lot more of it, and there's a lot more competition. And that's hurting New Zealand dollar. It's also hurting one of my stocks. Dean Foods reported earnings today, and they're a big. This is a big takeover candidate. They got smashed down to like 14, but then popped up strong. I keep thinking this stock is going to get taken over at some point. It still wouldn't surprise me. But the price of milk, which is hurting New Zealand dollar, is also hurting Dean Foods. So that one hurt. That one, listen, that one left a mark. Okay, I'm not too happy with that one right now. Okay, let's continue with some of the other ones. Now, I don't know if I've updated you on all these or not. I have sent them. Well, let's just get to them. I now have 3 longs and 3 shorts. I'm still long Apple. And I'm still thrilled to be long Apple. We're up like 20% on this stock. It's stronger than the overall market. Next iPhone is coming in less than a month, according to the rumors. That's one of our longs. Another one is JCPenney. JCPenney, nice big green candles today, coming back up toward their highs. Stock was upgraded today by a boutique firm. I think they are catching on to what we have already figured out, is that this stock has bottomed and the expectations are so low right now. Because, actually the thing that really gave me the idea was, I actually went for a walk through a couple of JCPenney's. And, as badly criticized as the company has been for the changes it's made, I was walking through JCPenney's. I said, this is pretty nice. I kind of like this. And I wouldn't say there was like really heavy foot traffic in there, but it's not getting worse. Does that make sense? It's not getting worse. And I really think people are moving away from other stores like Target. They might decide, hey, let's go give JCPenney a chance. It's not, all these people used to shop at JCPenney. And about 2 years ago, they abandoned JCPenney because of changes that the company made. At some point, don't you think it's reasonable to believe that those folks are going to wander into a JCPenney again? Hey, I wonder what's going on at JCPenney's. I think I'll go in and take a look. All right, so Apple's doing good. JCPenney's doing good. Our JCPenney is up more than 10%. Our Apple is up 20%. And our Dean Foods, which I already showed you, well, it's down. And it's down probably around 20%. This one hurts, but like I said, this is a different type of play. I do think at some point it becomes a takeover candidate. There's still a lot of merger madness out there, so there's still time. But I only have 3 longs, gang, and I have 3 shorts, which tells you how I feel about this market. Okay, I'm not too crazy about this market. One of the things I shorted was Kimberly-Clark. This is my newest short, KMB. okay, smashed down, popped up, shorted it. I believe we shorted this on Friday, so we're now down a tiny bit on this, no big deal. But look at the way it goes through. Let me show you the volume. Okay, come down on heavy volume. Although I gotta admit, the bounce has shown some decent volume too. But it seems to me that all the stocks in this sector all got smashed hard. They're all bouncing back up, but they're all under their 200-day moving averages. That's Colgate, right? That's Clorox, under its 200-day moving average. Kimberly-Clark, under its 200-day moving average. You go from an all-time high to being under your 200-day moving average pretty quickly here. That usually means that somebody big is selling. We are still short the Lululemon, which got a little pop last week. Got a little pop on news that the founder had sold some of his shares, half of his shares, to a private equity firm. I still think that this is just not going to, this is a terrible chart. Look at it. It's hideous, and I'm short. That brings joy to my heart. I'm not scared, man, about this thing going private. If private equity firms really want to buy this, they might pay less than the current price. You know, that's something to think about too. And just remember, you know, $100 yoga pants, you know, anybody can make those. There's no barriers to entry. The one that's taking me off a little bit is TJ Maxx, which is beginning to find a little bit of momentum, but we're still up on the trade, but not by much, you know. But I got some shorts, I've got some longs, I've got 3 shorts, I got 3 longs. I've got some other thoughts for shorts, but I haven't shorted them yet. I'm looking at gaming. Right, look at the breakdown here in Las Vegas Sands. Huge breakdown. What's going on? Macau gaming, right? The China, the casinos in Macau, or Macau, I'm not sure how to pronounce it. They're seeing a lot less foot traffic from China. New casinos in the Philippines are cutting into their business. And the same thing's happening here in the U.S. You're seeing saturation. You know, like Atlantic City that is closing, has already closed 1 casino and could close 3 more within the next month. Why? Because there's more supply than there is demand. There's only so many people out there who want to plunk down money on a casino bet. And anyway, I haven't shorted it yet, but I'm seriously considering shorting it. Okay. All right, ladies and gents, that is going to do it for me. What a fantastic session. I'm very happy and pleased for my students that are doing well. For the ones that aren't, keep trying, hang in there, and just make sure you don't get hurt badly. Okay, trade small. If it's not going well, trade small. Okay? All right, that's it for this week. Thank you so much for listening, and I'll speak to you again in just a few days. Everybody take care.